Right? How are we not talking about this, though? The potential of the fault line extending into the freehold segment. Are we just blind? Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Thank you, friends, for joining us. I, as a broker and investor, want to know what's going on in our local market, and that is the essence of this channel. We've been able to develop an amazing family of listeners, so thank you, thank you, thank you. Please continue to support the channel. Leave comments, like this video, download the last 5 episodes, wherever you're getting these shows. And I appreciate all the love and support you guys send. And I love having direct conversations as well. Feel free to DM me anytime. So today, we're going to jump into specific articles. Number one, I want to break down this discussion. Are condo owners in Toronto currently handcuffed? They're stuck. Or are they just holding out? And we're going to look at 2 counterpoints, the positive and the negative, and really help us identify what's going on today. And with Canadian households now at $90 billion in excess cash, will they spend it? What comes next? We have all this extra money pooled up. We're going to run into a few articles there. And will the Canadian housing market be a, quote, banner year? What an amazing, beautiful day it is today. And we like to have some fun in the show. And today we're going to talk about this idea of being handcuffed. Are people stuck? I mean, most Canadians are asleep to the things happening in our marketplace, but they go around pretending like they got it all figured out. So maybe being handcuffed isn't such a bad thing. Take Italians, for example. They wear handcuffs to bed, if you didn't know. So they don't talk in their sleep. Practical, if you ask me. All right, so let's discuss. I want to first go through the negatives, and then I want to go through the positives. So if you're just a doom and gloomer, you want to hear all the bad stuff, you're going to tune me out in a little bit here. We're going to start with the negative, and then I want to circle this back into what are the positive aspects. Are we actually stuck? Are we? Really? You're in the greatest city in the planet, and you're stuck? Let's see. Financialpost.com, Canada's housing squeeze. Buyers who want to move up are being handcuffed by their hard to sell condos. Okay, here's what they got to say. And this is actually a quote which we'll get to. The cracks appearing in the condo market may well become the fault line in Canada's housing market. So if you're like, you know what? I love talking about condos because they're losing value and I don't even care. I don't even invest in that arena. They could be the fault line in Canada's housing market. It could affect you. Before you get on your high horse. All right. So here's what the article has to say. So they're talking about this guy named Dale Paul Jordan. He's listed his condo in Toronto for sale last month and prepared to start bidding on detached homes. So he's out there looking for his place. You know, he's doing the normal running to the suburbs type of thing that only a couple people are doing these days. And the condo, they say, didn't sell or get a single viewing. Not even one? Like your realtor didn't even book one just to pretend? And it says when another seller in the building slashed their asking price, Jordan and his wife pulled the unit off the market and decided to delay their dream until spring at least. And this is kind of the template that we're going to follow. Are people being forced to hold until the spring, or are they doing it because in this case, they're being handcuffed? Well, how wonderful that condo seemed back in college days, right? This poor Dale Paul guy probably scooped up this unit, and that's life though. Right? That's life. We're all forever trying to recapture our youth. Here's some advice, though. Get better handcuffs so they stop running away. Ooh. All right. Sometimes we go edgy, but I love Jesus, so we're okay. One of the things we're handcuffed to is selling our condo to help with the down payment, Jordan said. That's what he's saying. So he's feeling shackled, feeling stuck. This situation is only expected to worsen with a near record number of new condos under construction. That's what the article says. But here, how does it trickle down? Here, all you freehold owners. As more people find themselves in Jordan's position, there will be fewer buyers for detached homes. Because don't forget, a big pool of these buyers are leaving the condo space and they're headed your way. Real estate experts said, and they could have a trickle-down effect on the red-hot detached home market. The cracks appearing in the condo market may well become the fault line in Canada's housing market. Why aren't more people talking about this as a potential? Now, I do believe, and we've seen in other articles in the past, people are overshooting the condo, saying, you know what, I can buy a house, interest rates are so low, they're so cheap. I can afford a detached home now. Why would I buy a condo? So there are those buyers. But there's definitely got to be buyers in condos that are looking to move that would further push that demand. Make it even more. And yet they're not in the game right now. Right? How are we not talking about this, though? The potential of the fault line extending into the freehold segment. Are we just blind? We need Jesus. Question for him, though. I hear you're healing the blind. What's the catch? Jesus just turns away. He's like chuckling. You'll see. You'll all see. I like to have some fun. Sorry, guys. I apologize for my poor sense of humor, but I find it funny. So, but I'm going to do this. I might as well enjoy it too. The average sale price of a detached home in the Toronto area is nearly 15% higher than a year ago, while condos have gained less than 1%. And the true story is that they're actually declining if you look month over month. The widening gap is putting pressure on condo sellers trying to upgrade. They're trying to upgrade. Indeed, some agents say they have had clients on the brink of reneging on detached home offers because of worries they won't be able to sell their condo. This drives me crazy. Listen to this. Quote, we came very close a few times, but we got the deal done, said Thomas. I'm not even going to say his last name because I feel like this is really bad for him. I don't know why he's putting his clients in this position. He says, I have had a lot of come to Jesus moment conversations, right? So what he's doing is he's going out and he's buying all these properties, assuming he's going to sell his condo, and he's not. And I have sold to people in that situation. You're screwed as a buyer if you can't sell that condo. So you know what the underlying story is here that they're not talking about? These clients, Thomas's clients, doubting Thomas in here. He's just dumping his clients' properties. Like, oh, anyways, if I wasn't an agent, I wouldn't be calling this fellow to sell my house. The government support means the real start of the recession has just been delayed. The surge in condos for sale is partly driven by investors facing a dearth of renters amid lower immigration, job losses, and evaporation of short-term rental demand due to pandemic-linked travel restrictions. Keep that thought. Is it investors dumping their units? Is it a result? And in this article, they're saying yes, it is, but we're going to hear a counterpoint shortly. Throughout COVID, right, we've been trying to predict the next move on rental rates, and it's been like trying to catch the fog. In that, we missed. Over and over again. It's such a difficult thing to track. And a lot of it is because the data is not all there. A lot of the landlords aren't all there either. A one-bedroom apartment in the old city of Toronto costs $19.22 on average, according to Rentals.ca National Rent Report. This is 2.3% drop month over month and 17.3% drop year over year. Old city of Toronto, almost 20% drop, guys. But then we compare it with a place like North York. The average price of a one-bedroom in North York went up. That figure is up 7% since September. 7%. September, October, in 1 month. Like, what? And it's only down 0.4% year over year. And they're not the only ones, right? North York is a very big spotlight on this one. In fact, they say a lot of people were moving to North York. Why? They're still close enough to the city, still a lot of resources, but they're outside of the central core. And it's so saturated downtown, they're saying. But we also have other successful areas. Kitchener, Hamilton, London. These urban exodus theory remains, respectively, at 14, 15, and 17% year over year increase in prices for rentals. Guys, crazy. All right. And to wrap this all up, we're gonna wrap up the negativity here, the realism, with Moody's Analytics forecast. You guys remember that was one of the ones where like, that's a pretty extreme forecast that they give. But you know what? It's a good way to end this school of thought. Canadian home prices will drop 7%, they say, in 2021. 7%? Shoot. With both detached and condos falling, by the way. It sees Toronto area prices slipping to early 2017 levels and not fully recovering until mid-2023. That's your worst case scenario, I might add. Ingram expects condo prices to continue to tumble as inventory piles up and sellers who hold off may regret doing so. So the concept is, you're waiting to sell that condo, and this is a counterpoint to a lot of things I've said, which I value, and I want to make sure you're getting both sides here, is sell the condo. Because if condo is going to go down in value now, your discount, that discount your neighbor is dumping those properties on that you're like, this is ridiculous, is going to seem like a walk in the park, according to folks like this down the road. Quote, today's cut rate may be tomorrow's good price, he said. As people are selling these units, that is reestablishing your property value. Don't get caught up, as we're going to see in another article later as well. But I personally, I like to look at both the bad and the good. Like if I just have the bad news, there's more than enough of that. I want to see the good news too. Well, here it comes. So if you just want the bad news, by the way, hit that like button on your way out and I'll catch you next time, right? But if you're like me, you're a curious person. You want to know, you want to see all sides. right? Like, wouldn't you want to know? Wouldn't you be just slightly curious what you get when you cross a human and a goat's DNA? Apparently just escorted from the petting zoo. Anyways, moving on. Positive side. Here we go. This comes from globalmail.com. And all these articles, by the way, are in the description down below. Condo sellers flipping the calendar early. Think of this approach. Handcuffed, option number one. Option number two is waiting until next year. Waiting until next calendar year. And here's how they say it. As the Toronto area real estate market cools in November, some sellers of downtown condos are already thinking about the spring of 2021. They're taking some downtime with plans to relist early next year. They're making that informed decision to wait. So you can't get your price? No rush. And that is the counterpoint. Which one is it? I don't know. Which article are you reading? There's just isn't the sense of desperation or panic that we would expect. This week, the Korea numbers came out. They edged down 0.7%, but we're seeing numbers going up. Won't get into that too much. When we look at TREB, they reported average price of condo units in the 416 edged up 0.8% in October compared with same month last year. But we recognize that that's an illusion because they even say here it's misleading. It doesn't account for the gyrations in 2020. Gyrations. The craziness. I like my words better. The psychoness. Lock him up. To say the market is flat is inaccurate, he says. It's quite evident. This is talking about Mr. Bibby. This is who they got quoting in this article. Mr. Bibby thinks some high price sales of luxury condos have also helped to buoy the average prices. Keep them afloat. Buoy, boy. Again, another word that throws me right off. I can't read. I can't read. I can't talk. I'm too quiet. I'm hilarious. Yet here you are. Are people still panic selling? This is the question. It's $1 million question. And here's what they say. There was more of a panic earlier in the spring. Will we ever be able to sell? That's what people were saying. That brought a lot of fear into the market. At the moment, Mr. Bibby feels buyers and sellers are at a standoff. We're at a standoff. There's a clash that's happening. Not handcuffs, a clash, a battle, right? Power struggle. And whether or not you're going to refuse or accept lowball prices. And news in the past week in vaccine candidates have shown promising results, has given some sellers hope that problems are temporary. And we've seen other things talking about agents coming out and saying, you know what, as soon as they announce the vaccine, I sold everything. So that does have an impact. Knee-jerk response. I am sensing a lot of the sellers I'm working with are digging their heels into the ground. This comes from a realtor. And I sense this thing too. Now, everyone has their own circumstances. Some people are going to dump these properties, and people were dumping their low rises as well, but not everybody. And that doesn't mean that you need to. So here's the standoff. The sellers do have control, he says. You don't make or lose money unless you sell, unless you're losing rental income. But from an equity perspective, he's right. Some owners contact him to say they are considering listing a unit, but they won't sell below a certain price. Dangerous territory. The dinky agents will say, yeah, okay, let's do that. Legitimate agents will say, well, why? I'm like, no, no, it's part of your selling of the property. It's got to be priced correctly. You're just spoiling your listing. Anyways, I'm sure there's some 1%ers out there that'll do that for you if you want. But if you're picky and if you're picky like that, are you really trapped? Like if you're able to go head to head in the standoff, you can wait until the spring. You can afford to do that. Are you trapped? Right? If you want to talk about being stuck, many years ago, I'm gonna give you some transparent information. I'm gonna be honest with you guys. I was a man trapped in a woman's body. Then my mom gave birth, so it's all good now. All right, quote. I tell them I really genuinely believe that I can't achieve a number like that. See, this is an honest agent. I like that. There are some people whose ideas align with a pre-pandemic market. And we've seen stories and stories again where people are confused by the value of their home. They just assume, well, it sold like that a year ago, so it must be like that now. He says this, quote, I know for a fact there are people waiting for an opportunity. Talking about the buyers. I think there are a lot of people watching what's happening and trying to time the entrance. This is why you need to be quick, guys. The major news outlets are telling you people are waiting, like you might be. So if you're going to do that, be ready. We need to be quick. And if you're just looking for a condo deal, they exist today. If you're trying to be fast and you want to time the market, you need to be rapid. Rapido. Quote, the investors that I work with are holding. This is what he's saying. Holding. Investors. Remember the last article talked about investors are dumping? Well, this dude says they're not. They're lowering their rents and they'll get through it, he says. It's actually quite fun being a buyer right now. There are buildings you could never get into. You can get into those buildings today and pay 5% under asking. So what do the economists say? We're going to wrap it up here. Put a little bit of reality into this article because it's very exciting in that there's a lot of power given back to the condo owners. We're not going to let you off that easy. Mr. Sondi at TD says sales so far are being supported by low interest rates and resilient employment in high wage industries. He believes recent sales are likely above the level supported by economic fundamentals. Quote, in our view, they can only remain that way for so long. It's not going to happen forever. Your price appreciations, guys, he's talking about. Adding that he expects sales to continue to cool in the coming months. I hope so. I hope so. The weather's going to cool, and so should the real estate market. If it doesn't, watch out 2021. And GTA investors are just reaching out right now for some form of support. And the news is all like, cheer up. Things could be worse. You could be trapped in a deep hole filled with water. I know they mean well. All right, let's get on our next topic. Did you know that Canadians are holding $90 billion in excess cash, but will they spend it? And I'm going to come at this from two articles because I love the different angles and I want to make sure we're clear as investors on what are the counterpoints. Starting with our friends over at Better Dwelling, why not? CIBC, Canadians have $90 billion in excess cash as government doubles income loss. Here's what they say. Canadian households are sitting on a record amount of cash, waiting to be spent. CIBC Economics' latest report shows tens of billions in cash just sitting in accounts in Q2 in 2020. And this is the report that they're all working from. The same data, different stories. The increase is due to a combination of government supports, lack of places to spend, and payment deferrals. You know those big looming payment deferrals? Yeah, that's the reason people have so much money. Canadians are holding on to an astronomical amount of cash in their bank accounts. Astronomical is an understatement. They estimate the amount to be equivalent to 4% of consumer spending. So suddenly everyone's a great saver in a country with notoriously high household debt. Well, they say not exactly. So listen to these numbers. This is nutty. I've heard it in this perspective, okay? To put it bluntly, the government replaced every $1 of income loss by how much? How much do you think? So you lost $1. How much did the government fund you? Unbelievable, guys. $2.25 in 1 quarter of 2020. 225%. That's crazy. An unprecedented event for a recession. And then I see little articles like this as a bit of a side note. MSN.com, audit demanded after more than 800,000 ineligible people got CERB. No, duh. So a conservative MP sent to the CRA, they're saying, you have some explaining to do, man. There's 800,000 people didn't file their returns, yet they're claiming $2,000 a month. They shouldn't be allowed to. Right at the gate, people are frying the system. Deal with it, fam. But naughty Canadians, man. I guess Santa will be bringing a whip, a pair of handcuffs, and a gag for Christmas this year. Oh, you know what? That's a little rude. I'm sorry to my Italian friends out there. I know bondage isn't your thing, right? The cuffs, they stop you from saying the safe word. All right. Canada's household savings rate hit 28%. Combine the higher income delivery with restricted spending, the mortgage deferrals, you get a lot of cash. Prior to the pandemic, the savings rate had reached 3.6%, already a worrying climb. And during the pandemic, it escalated to as high as 28.2%. They got a chart on here, and it's ridiculous. So if you get a chance, jump over to this article, find it down below, and just look at it. Like our percentage of household savings rate was above, it looked like 22% back in 1983. And it's slowly been working itself all the way down to, 3% recently. And now all of a sudden it just slingshots in 1 quarter to over, 27, 28%. It's crazy. It's like it doesn't fit in my worldview. It just like breaks my mind. Anyways, we saved a lot of money if you can't tell. A second lockdown is approaching, but another surge of excess capital is unlikely. Interesting. So we're not getting it again. Don't expect a round 2, they're saying here. Programs are now much more targeted and payment deferrals aren't raining from the sky. However, this is still a very large capital pool that's going to need to be deployed in a more efficient manner soon. Why do we got to spend it? Save it. Guys, if you've just saved all this money, the game plan shouldn't be running out and spending it. Now, our economy requires a level of spending, but what this goes to show you, what this shows you is that despite having all of this cash piled up, right? As Better Dwelling would say, despite all the money, Canadians recognize that the way to come out of this is to stop struggling and to relax, right? Stop struggling, relax. Government debt is a future loss, but having the savings, in my opinion, is a win. Stop struggling, chill, take your money, you're welcome, and just relax. It's like quicksand. Like the four Mexicans, by the way, trapped in quicksand, or as I like to call them, Cuatro Cinco. All right, but let's look at the other side, because Better Dwelling is going to paint that rough picture, as they notoriously do. But what does BNN Bloomberg has to say about the exact same report? Canadians sitting on largest cash hoard ever recorded. Here's the highlights. Not only did we save a bunch of money because of all the government programs in the CERB, here's something that they add that Better Dwelling conveniently missed. Benjamin Tal, they're talking about, forecasts that households' cash hoards are expected to grow further. They're going to grow further. So they're not just over. It's not done. The deferrals are over, right? All of these programs are over. And our spending is obviously still down, but they're expecting it to grow further. So it's not just the programs. Maybe people are finally learning. The report says consumer spending is set to slow down in the coming 4 to 5 months, with the pandemic overlapping with flu season. Maybe a vaccine will be the green light for people to actually start redeploying the mountain of cash they're sitting on. I love how we got to deploy it. Why do we got to deploy it? Grow it. Invest it. I mean, that's the difference between the wealthy and the poor. What are the businesses doing? What are businesses doing? Because we talked about the personal side. Well, Canadian businesses are growing their cash positions by almost 15% year over year. You know, those struggling businesses, how crazy of them to try and back up and save some money. And many of them are getting these grants, these free money, business, government money, whatever, CEBA, for example. And they don't really need it, but why not? They're getting all these extra. So you're seeing some people falling apart while other people stockpiling up to 15% year over year increases in money. I think a lot of this cash is held by companies and sectors that are not impacted directly by the crisis. In fact, they're benefiting from it. And maybe some of you know folks who took CERB that benefited from that program as well. Good intentions fail, right? Does government support guarantee we can increase spending to stimulate the economy? No, it doesn't. That's why it's not necessarily a good idea in the first place, as we've been saying all the way through. But take your $2,000 a month and enjoy it. Invest it, right? The rich get richer in an environment like this, taking advantage of things like mortgage deferrals, CERB and CEBA in their businesses. What are the poor doing? They're getting poorer. They're unable to keep up with house prices climbing as interest rates continue to come down. So we're seeing this divide continue. Thank you, government. No names needed. Let's just not get mad when wealthy people get ahead, okay? Don't get upset. Don't get mad at me for constructing and building my business within the legal parameters of the government and the tax system. So my lawyer, I'm going to put on my lawyer's face here. My client is clearly trapped in a penny. A what? That's the judge. He is innocent. All right, moving on. Let's do some hot topics before we get into our last and final, talking about the success of the Canadian real estate market. Where are we today? A couple big things I saw. BNN Bloomberg, annual pace of housing starts climb higher in October. CMHC, the annual pace of housing starts increased 3% in October compared with September. And although the increase was less than some economists predicted, it's still growing. But what I wanted to note from this article is the difference in what is being developed, because clearly things are being developed. We're increasing it despite COVID. Well, condos versus freehold. The annual rate of urban starts rose 3.5 in October. 3.5. So urban is obviously outperforming rural in developments. The pace of urban starts of apartments, condos, and other types of multi-unit housing projected edge down 0.2%. Down. Baby, are you down? Anyway, urban starts for single family homes, because we know it's up, they're up 14.3%. So there's a lot of construction happening, and it's only in the single family homes. Not only, but primarily by a big margin. For the last decade, high-rise construction fueled housing starts thanks to millennials and international migrants vying for a little slice of the sky. But now with immigration flows slowing and a shift in preferences for larger suburban homes, we could see a bit of slowdown in condo construction. And if you're comparing year over year, when we have astronomical increases of production, and starts in the condo space, it doesn't take much for that number to come down. So not to say they're not being built. It's just as a proportion of new starts, the single family is just taking off. And it brings me to another article from the Globe and Mail. Beacon Hall Golf Club eyes $250 million sale to Toronto real estate developer. There's a course with 250 members in Aurora, and they're voting in February. They got an offer for 200 acres for $250 million. They're not the first to do this. We're starting to see a lot of large landowners, including golf courses, being given offers and trying to convert into single family homes. It's a trend that we're going to continue to map out as time goes on. Hit that like and subscribe button for more. But if we get rid of the courses, where will the politicians, the bankers, the mafia bosses, where will they go to play golf? Right? You know, because that's really the only thing they can play with handcuffs. Wait, no, hang on. Backtrack. Maybe just the bankers and the mafia bosses, because we don't hold politicians accountable in this country. Oh, I like that. I like that. You know, sometimes, okay, moving on. Those are the zingers. Oh, I love zingers. BlogTO.com. Toronto man films himself asking owners of expensive homes what they do for a living. I think it's dumb, but it's TikTok and it's trendy. And it's actually the biggest article in Toronto real estate today. This idea that a guy is going up and knocking on people's door and saying, hey, what do you do for a living? You got a nice house. It's a trend people have been doing with nice cars for a while. I'm on TikTok because, you know, I'm cool like that. So he's just doing the same thing everyone else is, but he's getting a big following, and that's cool. Good for you, man. So will immigration, I want to get into immigration now, more substance instead of the TikToks. Will immigration continue post-COVID? This is the question. People are so nervous to travel these days. Mind you, with the TSA, people were kind of scared to travel for years before now too. I mean, I know a guy who was taken off a plane in handcuffs and all he did was greet his friend Jack. Toronto Life, they have an article of this couple moved to Toronto during the pandemic. They got a 500 square foot condo for $2,100. And they're talking about a Vancouver man and an Irishman from London moving in together and applying for permanent residency in 2021. Just a story of people moving to our city still. And so a livable.com article, immigration rebound, low interest rates will shape Canada's housing market in 2021. And they remind us, quote, I feel the disruption caused by COVID-19 is a temporary situation and will most likely return to normal much sooner than most people expect. That's Simon S. Mass, CEO of the Condo store. While economic stimulus by immigration isn't a new concept, Canada's 2021 to 2023 immigration commitment, that is 1.2 million new immigrants over the next 3 years, right, will provide a strong foundation for further growth in the housing market. Quote, he says, given the immigration has slowed due to a worldwide pandemic, the government is planning on making that up and more over the coming years. This is a great sign of a commitment that will help the real estate market moving forward. People continue to weigh in on this immigration debate. We will see. We've bounced back a little bit, but it's still not there. And that is going to be a big requirement for helping the rental market and therefore the condo market, and maybe with the fault line inching its way towards a freehold, maybe the whole market in general. All right, so just a brief update on COVID lockdown. We're waiting for more news tomorrow on Friday. Toronto, like a chef, said to the fly he trapped under a strainer, this is a fine mesh you've gotten yourself into. Speaking to Toronto. Right, so De Villa, this is what is this? This is the Toronto health person. That's the official title. The Toronto health person. I'm not going to get into the details around that because they are part of the active conversation and discussion that we're having right now with the province and with some other partners in and around the GTA. That was asked, what are you going to announce on Friday? That was a reaction. That was a response. Some help you are, health person. Here's what's going to happen. This is what the best thinking is right now. Possible COVID lockdown. Lockdowns. Oh, lock them up. Toronto, Peel, and York as cases report 1417 in Ontario. Crazy. New COVID restrictions are likely to be implemented later this week in 3 Ontario regions. And you know how fast this spills over, right? You do recognize how quick. We're talking days after this. Very likely you're going to see other regions follow suit, right? Ford says it's extremely, extremely concerning. And they said all 3 are staring down the barrel of another lockdown. Health Minister Christine Elliott said Ontario expects up to 2.4 million doses of vaccines when between January and March. Let's see, because neither vaccines that we've talked about on the show have been given a green light by Health Canada. Let's see if that happens. All right, let's get into our last and final topic. Hope you guys are having fun here. I know I'm having some fun. Leave me a comment. Let me know if you've learned anything today. Will Canadian housing market be a, quote, banner year? This is a TorontoStories.com article. 2020 will be a banner year for Canadian housing market, according to BMO. When COVID first hit, everything shut down across the country and everybody froze. But just like that guy who was captured by the cannibals and turned into a canoe, we're in ship shape now. Last month, national home sales dipped 0.7% in seasonally adjusted terms, but they still managed to break another October record, soaring more than 32% year over year. So when we look across Canada, it's unbelievable. I mean, we see success in and around the outskirt communities of the GTA, but when we look across the country, it's incredible. Woohoo! BMO senior economist Robert Kapchich said 2020 will be a banner year. Kapchich did note that following 3 months of record sales activity, which can be attributed to pent-up demand from the spring, he says, Treb would argue it's not just that, but I mean, it's definitely there. Some easing of sales should be expected in the months to come. I hope so. Let's get back to some form of normalcy. That said, sales on a year-to-date basis are now up 8.6%, and this year's total volume looks like it has handily eclipsed 2019. There's more than just making up for lost time going on. People find real estate is safe. If you were to think about all the investment options in front of you today, would it be a tech stock that you feel is safe? I don't know. Real estate's looking pretty good right about now. National sales to new listings ratio fell a few notches to 74.3%. While they're still down from September, Kapchich says this still effectively reflects the tightest market in 15 years or so. Again, we're not dealing with just Toronto. Canada is doing fantastic. At a national level, home prices rose 10.7% over the previous year. And then they actually highlight a few places. Modest price gains range from 1 to 1.5 in cooler markets like Calgary and Edmonton. They're still up. Actually, it looks like 1 to -1. I don't know how they really wrote. Anyways, it's flat in those areas. While we see 20% in Ottawa. Whew, nice. Among the major markets, Ottawa led the price with growth of 22.4% year over year, while Montreal was not too far behind at 15.4%. We got some exceptions. PEI, British Columbia led the pack in October when we look strongly across the province. Anyways, point is, the country is doing good. And I don't want to beat that with a dead horse here. Anyways, beat a dead horse with a bat. I don't know what the saying is. Single detached dwellings are significantly outperforming condos. So this condo dilemma, this is not just a Toronto thing. Now they do mention Toronto as a big factor, and condo prices are effectively flat versus March, which we know. And then the slowdown looming. We're going to kind of wrap up here. The CIBC Deputy Chief Economist Benjamin Tal recently suggested that a market slowdown was coming to the Canadian real estate sector, saying, even the government of the Bank of Canada is telling us, listen, don't expect any growth basically over the next 6 months. Talking about GDP. The party's over. You can't have a 0% increase in the economy with the housing market continuing to boom. Tell that to 2020. I mean, obviously there's some holes in that theory, but you get my point. As with all things, real estate included, only time and potentially vaccines will tell where the market goes from here. Hopefully you guys had some fun today. Make sure you download 5 episodes if you're following us. Give us, do whatever, man. Honestly, I don't like asking. What I appreciate, even if you do nothing, I appreciate the community we've been able to build on this channel. I've been having lots of fun, and I love hearing from you guys directly. I know it doesn't boost the channel, but I like to talk to you guys. So we're going to wrap up here today. And when I eventually travel again, instead of shot glasses, when I go around looking at little stores, maybe I should start picking up some handcuffs. It only makes sense for tourists. Tourists. Fail. You're fired. This is where I'm going to drop off your video because it sucked. I'll see you guys next time. Take care and keep it real.